happened in 45 minutes. An error so small, in a system so old, triggered one of the most expensive mistakes in Wall Street history. Stocks exploded, prices went insane, billions evaporated from the market, and one company, Knight Capital, lost $440 million before lunch. Not because of fraud, not because of hackers, but because of a single forgotten piece of code from 2005. This is the story of the glitch that almost broke Wall Street. Before the disaster, Knight Capital was quiet, invisible, a behind-the-scenes Wall Street firm. They weren't the richest, they weren't the most powerful, but they controlled something far more dangerous: speed. Knight Capital handled 10% of all U.S. stock trading. Billions flowed through their servers every single day. They were the unseen engine of the market, but engines break, and Knight's was rusted from the inside. The problem started with something ridiculous: a software update. Knight installed new trading software called PowerPeg, but when they uploaded it, they forgot to remove an old piece of code from 7 years earlier called Power Router. One server still had the ancient code, just one. That would be enough to trigger chaos. In tech, they call this a ticking time bomb. Knight didn't realize theirs was seconds from exploding. When the market opened, the glitch activated instantly. Knight's system went berserk. Instead of executing trades normally, it started buying and selling stocks at insane speeds. It wasn't trading, it was vomiting trades. Stocks shot up 300%. Others collapsed. Charts looked like heart attacks. Traders watching the screens panicked. What is that? Who is doing this? Turn it off! But Knight couldn't stop it. Every second, the glitch lost them $10 million, like trying to stop a runaway car with broken brakes. The entire market shook. Companies thought hackers were attacking. NYSE officials were scrambling. Some stocks moved so violently that trading had to be halted. A single glitch was now destabilizing the biggest financial market on Earth, and Knight Capital was bleeding to death. Their losses crossed $100 million, and then $200 million, and then $300 million. By the time they pulled the plug, 45 minutes later, Knight had lost $440 million, almost their entire net worth. Knight was dead, or at least it should have been. They had hours, not days, to survive. If they didn't find money fast, the company would collapse and take a chunk of Wall Street with it. Vultures circled. Competitors watched like sharks. And then, the buyout offers came. Wall Street smelled opportunity. Knight received emergency funding from a group of firms. But there was a catch. They demanded a huge stake in the company for a dirt-cheap price. Knight had no choice. They signed. They saved the company, but lost their independence. The glitch didn't just cost them money. It cost them their identity. The Knight disaster exposed a truth Wall Street didn't want the world to see. The financial system isn't safe. It isn't stable. It isn't modern. It's a patchwork of old code, old machines, old assumptions, running at lightning speed with billions on the line. Knight wasn't an exception. It was a warning. A reminder that one line of code can shake the world. The $440 million glitch wasn't a crime, wasn't a hack, wasn't sabotage. It was a ghost, a forgotten piece of software from a forgotten era. A ghost that reached out from 2005 and punched Wall Street in the face. This is the story of how one tiny bug almost broke the market, and next time, we might not be so lucky.